Hello everyone and welcome to FinTech Week at Mobile World Congress Africa. My name is Brian Gorman. I'm the FinTech lead of the GSMA based in London. Thanks for joining us today and we hope you find this a really interesting and a very useful session. On behalf of the GSMA, I'd like to extend a warm thank you to our founding sponsors, Mastercard, MTN, Orange and ZTE, and indeed a special thanks to Mastercard for sponsoring the FinTech theme. We do have a very busy session in the next 30 minutes. So we need to move on, and I'd like to introduce our first guest speaker, Amnah Ajmal, who's the Executive Vice President from Mastercard. Amnah, good morning.
Brian, thank you. Hello, everyone. I would just like to share my screen, so give me a moment. So I hope all of you can see my screen. It's a pleasure to be speaking at this event at a very, very exciting time and a very, very interesting topic, the future of fintech. The development of fintech is a very exciting field because it has brought in such superior consumer experience, which technology has enabled it. You talk about machine learning, artificial intelligence, intricate algorithms, big data. All of these new technologies are gradually replacing the traditional financial practices and the way we used to offer products and services and the way we used to serve our customers. This is a great opportunity considering how we can not only improve and innovate the consumer experience, but how we can collaborate across the ecosystem with different partners. And with this, I would like to remind you of a quote: study the past if you would divine the future. Drastic changes means that sometimes we need to look into the future with an angle of looking into the past. Most technologies and ideas and programs and customer experiences that we see today could be reinvention of the things that have existed at some point in time. But the only difference is that technology is now enabling those experiences in a very different way. But those expectations, those needs, those human emotions are the same. Let me take you into the past. One example that we really talk about now in the financial services world today is marketplaces and super apps. Looks like a very new concept, never existed before. Let's take a step back and imagine a bustling marketplace. Since humans have been on Earth, there has always been some form of trade. Open air public markets existed in Babylonia, Greece, the Arab world, and across all ancient civilizations. Historically, bazaars originated in Persia, and these earliest bazaars are believed to have spreading across the rest of the world from Persia because every Friday people would gather in the city center for a full day of shopping. Traders were selling everything from spices to ceramics to livestock, and buyers were roaming around different stalls in these marketplaces to find a good deal. It was convenient, it was simple, and you could get the best price. You could also ask your fellow shoppers around how was their experience and buy things based on their reviews and recommendations. These marketplaces gave people the opportunity to browse and buy for convenience in one place that had it all. This Bazaar of Tabriz was actually the Amazon of that time. And this culture then spread across different countries, be it Egypt, be it the Grand Bazaar in Istanbul that still exists today and is one of the major tourist destinations. It was built in with the purpose of attracting the consumers who could find convenience, simplicity, and all the goods that they need in one place. Today, marketplaces are accessed online. 5,000 years later, it was the time when the marketplace moved online. In 1982, the Boston Computer Exchange launched the world's first e commerce marketplace. It was like an online market for people who were interested in selling their used computers or computer accessories. It ran on IBM computer with two floppy disk drivers, pioneering efforts in creating a full internet based marketplace. So it has existed since 1982. Now, with hundreds of marketplaces at our fingertips, Amazon, eBay, Alibaba, Shopify, Etsy, and many others, It's kind of a proliferation of online bazaars because half of the online transactions globally now are taking place on these marketplaces. At the end of the day, it's all about the user experience. Commerce has never been so accessible and so convenient and so easy. And we at Mastercard are a proud partner of these online marketplaces, enabling the safest and secure payment ways across millions of transactions that take place every day on these marketplaces. So, what are these marketplaces? Aren't they the bazaars reimagined? They are, because at the end of the day, the consumer expectation and the basic human need of a marketplace has existed for thousands and thousands of years. Now, technology is enabling them in a very different way. Let's talk about super apps. Now, the marketplaces are evolving into super apps. And why should I have 20 different apps if I can just have one? BlackBerry founder Mike back in 2010 defined super apps as a closed ecosystem of many apps that people would have every day because they offered such a seamless, integrated, contextualized, and efficient experience. It started out with WeChat in China, who expanded from messaging into gaming into payments. You could order a banana, you could buy a house, you could take a ride. Literally everything can happen in this one app around your lifestyle. And today, most global giants and telcos have a vision to become a super app player. Why? Because it offers convenience, flexibility, and a simplified user experience with a one stop shop. So, technology paved its way, bazaars became marketplaces, marketplaces moved online, and then those online marketplaces are transforming into super apps. Let's look at the access of financing, another example where we go and peek into the past. We understand that human needs are what drives innovation, and an essential human need is to have choice, which has triggered the rise of consumer payment plans like buy now, pay later. Now, you may think that buy now, pay later is very new and it's just the rise of fintechs who are coming up with buy now, pay later product in the last few years. Let's take a look back at a century ago how this all started. In the 1930s, during the Great Depression, people had limited disposable income and they needed help with their finances to be able to make purchases. And there you see the slogan of buy now, pay later, because you could make your purchases and pay for it later in installments. Lay it away, please. So sellers introduced layaway plans, which is a purchasing method in which a consumer places a deposit on an item to lay it away, which means it's kept for you. You can pick it up when you have the remaining balance to pay it off. It lets the consumer make smaller payments, and you keep on making the payment until you have purchased the product in full. It was quite popular, and it died down in 1980s with the popularization of credit cards. So whether we talk about buy now pay later plans or layaway plans, they're not something new. They've existed for hundreds of years, and 30 years later, a similar concept reemerges as buy now pay later. And today, we think of these apps which are financing and allowing a shopper to split their payments. Basically, they are actually meeting the same need, which is providing choice and flexibility to consumers. Buy now, pay later provided that layaway didn't, because that's instant gratification of taking your purchase home after the first payment and having the flexibility to make the remaining payments later. The only difference is now the technology is powering it through a mobile phone, and on our fingertips, we can shop and choose the payment plan. So the user experience is completely different, powered by the technology here. With now, what we see is so many providers offering simplicity in financing to consumers across the world. At the heart of its simplicity of opting in for the service and easily paying back in the installments on your phone is the technology. More and more players around the world are starting to offer this service, from fintechs to banks to schemes. And we recently announced our buy now pay later technology, which is gaining great traction because, being a large network of merchant and financial institutions, we're in an ideal position to drive flexible payments for the end consumers. And this buy now pay later technology innovation has enabled the buy now pay later industry to become a $100 billion industry by 2020. It's expected to reach $680 billion by 2025. The concept may be new, but the need and the way that need has been met in the past is old. talk about another new innovation that we think is new and may not be new. Let's take a look at personalization. We think personalization is something that is being enabled now through technology, and it's a new need because human beings want personalized solutions and products and services, and they're okay to exchange their personal data in return for these personalized services. Across many cultures, tribes, and families, there was a concept of using monograms to create an identity of their tribes with their initials, and many still do so today. They would put them on their clothes, hats, furniture, and other belongings to express their identity. Personalization has always been an expression to be able to identify your individuality, your own feelings, and be recognized as an individual. In 2006, Time magazine named you as its Person of the Year in recognition of the way that user generated content created by individuals and made it available to a wider audience was changing the commercial world. Individuals who used supermarkets, individuals who buy goods online, who traveled, all expect their supplier to know something about who they are and who they want. That's why you became the most important phenomena. Then became the personalized MSN bios. I don't know how many of you remember it. It was a practical way of identifying your personalized profile, a branding for yourself, a marketing tool to be given to identify who you are, a statement for yourself. And from MSN, letting you type a personal message to indicate about your profile. We moved to personalized coffee cups. Starbucks writing your name on your coffee cup. And who remembers the mass advertising on radio? Advertising and marketing started from in a mass way, right? Especially in the area of marketing and loyalty, because radio a century ago was just allowing mass advertising. Where are we now? We are seeing personalized ads on social media. But even in those times, the personalization was available because through radios, you could actually, within the mass advertising, target individuals who would listen to that program at that point in time. So, what do these ancient bazaars, layaway plans, and monograms have in common? They were all common practices in the past. They have been reshaped and reintroduced with technology in the 21st century. Technology has enabled personalization to be possible.
Amnah, thank you. It was a really interesting presentation. I think the pace of development on buy now, pay later in particular is quite staggering. But thank you for a super presentation, which I'm sure our audience would have enjoyed. I think we're going to move on now to our panel discussion. I'm joined now by Awa Gueye, he's the CEO from Mowali, and Lesley-Ann Vaughan, who's the Director of Product Strategy from Mojaloop. Awa, Lesley-Ann, good morning and welcome.
Good morning.
Good morning.
Good to see you both, and thanks very much for joining us today. Perhaps I could start off, Awa, with yourself, and could you say a few words by introduction for both yourself and introduce Mowali to our audience, please?
Sure. Good morning, everyone. My name is Awa Gueye, and I'm the CEO of Mowali. I'm delighted to be part of this panel. I appreciate being here with Lesley-Ann, who is one of our great partners, as Mowali is built on the open source software Mojaloop. And on behalf of all my colleagues at Mowali, I would like to thank the GSMA for enabling this platform. A few words about Mowali. So we are a payment gateway. We are a joint venture between MTN and Orange. And we have been created to be an active contributor of the financial inclusion in Africa. We aim to enable interoperability of the mobile network operators across the continent. But Mowali is definitely a platform open to all, not only for Orange and MTN. So every other players in the financial sector is welcome to join. I will stop there and maybe give the chance for Lesley to introduce herself as well. Thank you.
Thanks, Awa. Lesley-Ann, good morning. Over to yourself. Perhaps the same thing. If you could say a few words by introduction for yourself and for Mojaloop also, please. Thank you.
Good morning. It's very early here in the UK.
I know.
And so what we are at Mojaloop Foundation, we are a non-profit open source software foundation, and the world these days is built on open source software. And what we do is we provide payments clearing infrastructure to help those who do the hard work in the last mile get safely and securely connected to each other through services like the service that Mowali is running. Mowali is an important flagship pioneer user of the open source software at Mojaloop Foundation. And our vision is basically that it should be really fast, easy, safe to send and spend money ubiquitously. We focus on instant interoperable payments via push payments. There's no card infrastructure in our mindset and thinking and design.
Super, Lesley-Ann, thank you. Awa, could you just give our audience a feel for where Mowali is at the moment, your current proposition? What's the scale, which markets you're live in, which countries? Could you give us a feel for just where the business is right now, please?
Yes, definitely. Especially since we are at very exciting times at Mowali, and 2021 has been really a critical year for us as we had the opportunity to accelerate our onboarding, our reach by entering new geographies within the continent. For instance, Central Africa with DRC that is live, and East Africa with Uganda, Zambia in Southern Africa, and we also in North Africa with Morocco, and even outside of the continent in France. So obviously this is just a starting point as we aim to quickly cover several countries in each region of Africa. For instance, accelerate the West African market, in the last part of the year and next year. This is basically where we are in terms of our coverage, and in terms of technology. Of course, I would like to say a word here, since and especially in presence of Mojaloop, in terms of technology, we made sure to add enhancement and boost the readiness of our platform this year, and this will continue moving forward to make sure we respond at best to the customer needs moving forward. Definitely in the next several years, the priority will be to continue accelerating our coverage across the continent and giving the opportunity to more and more Africans to do remittance cross-border, but also outside the continent by connecting into key remittance player, connecting to banks, connecting to enabling merchant payments. So everywhere where the customer needs us, Mowali aims to be present. In a nutshell, this is where we are and how we plan to develop in the future.
Super, thanks, Awa. Lesley-Ann, could I ask you, what do we mean by interoperable, and from your perspective, what does it take to actually deliver that well?
So what we mean at Mojaloop Foundation by interoperable is that we need to think about what exactly is an instant interoperable payment. We think that push payments are at the center of good, efficient, strong infrastructure in an African context. We think it's about pay me, not necessarily pay this account. When you look at bank accounts, often the identifier for an account is a sort code and an account number, or branch numbers, or all kinds of IBANs, and those are hard to remember. So in a financial inclusion setting, we very much focus on pay me, which is mobile phone numbers as identifiers, or maybe email addresses or merchant IDs. And how do we create those in a way that if a customer chooses to change service, they can take their identifiers with them, and now actually they can choose how their money lands. We also think about inclusive and consumer protecting design elements. So, for example, confirmation of payee is part of our protocol. And so we think about, well, how do you actually do that in an interoperable sense? So name lookup is a very important part of our protocol, as is charges transparency. I think as the world is changing and regulators are looking very closely at the role of instant interoperable payments in financial inclusion, being very transparent to customers and making sure that your protocol is designed with those kind of things in mind is where we help those in the last mile doing the hard work of making this happen think about good interoperable protocols. And so we're the home of an API standard that the Mowali team have launched, as well as others. So what we're looking to do is look at how do we reduce payment fragmentation? How do we start to make it very simple for customers to understand what to do so that we can build trust? Because fundamentally, when we build trust in services, we get customers to engage more. And when we remove cost from the ecosystem by creating an efficient set of rails, then customers will actually transact more, hopefully, as well.
Yeah. Lesley-Ann, when we use the word customers, do we mean the actual consumer of the app itself, or do we mean merchants, or indeed both?
So we at Mojaloop Foundation are B2B software. We are software for those doing the hard work in the last mile. We don't provide any apps at all. We're Rails only. So the customers of a payments clearing service are mobile money companies, SACCOs, MFIs, and banks. Everyone should be able to connect to the same loop, and then add fintechs into that puzzle. We've been looking very closely at what's happened in India with UPI. And when you look at that, you see actually there's an API provided by the center for fintechs. That means that fintechs have far less work to do to accept payments in in a world with an API like that. You see the volume growth was 70x when you look at when the UPI launched versus when MPCI launched. And fundamentally, as we move into this world of smartphones, how do we use the fact that the credential on the phone, the biometric capability of the phone, can be part of the story? And so we have a blueprint for how do we add fintechs in as a first-class citizen to the same rails as for the banks, the MFIs, the telcos, and the SACCOs, who are account-holding institutions. Those who provide accounts, they provide them to merchants, they provide them to customers, they provide them to everyone. Our vision is that those who are part of Rails, instant interoperable Rails, provide services to those beyond, and the customer of the smallest mobile money or fintech institution, they hold money for the customer, and that customer can send and spend money to the largest customer of the largest bank in the same network. That is our vision.
Got you. Thank you. That's really helpful. Thank you. It's very insightful. Thank you. Oh, from your perspective, just looking ahead to say the next 12 months, what would make a good 2022 for Mowali? What would be if you're going home Christmas this time next year and you're reflecting on the year? What would you like to have achieved?
Yeah, so 2022 will be really for us about accelerating our coverage. Coverage is very important in our industry. It's what actually will make you relevant. So to be more and more relevant, you have to give the reach to your customer to cover markets they are not in, to cover channels they are not in. So making sure that we increase the reach of the mobile money wallets of Orange, MTN, but also onboard additional partners in our platform. So this is our main objective for the next 12 years, and definitely everything that goes around, making sure that our platform responds more and more to the customer demand and is scalable to absorb this increased network, these increased transactions. So in a nutshell, this is where we plan to be next year.
And feel for scale, are we talking about 2 times this year, 3 times this year? What would, in terms of scale of the transactions coming through the platform, what are your aspirations?
Oh, I would say 2 times this year at least.
Okay, gosh.
We have a very aggressive objective for and what we've seen, what we have been able to do this in the third quarter of the year, and the plan of the last quarter gives us confidence that we can achieve that by next year. Super,
thank you. Lesley-Ann, can I ask you, when you were talking, you mentioned confirmation of Payee as part of the proposition that you bring to market. Could you just elaborate on that? Does it work like the new confirmation of Payee in banking in the UK, for example? Does it check the merchant you're paying to, that account actually exists? Could you just elaborate on that, please?
So fundamentally, yes, it's a decentralized architecture. So all the KYC data lives with the banks and the telcos and the mobile money companies in a country. But the routing software at the center, the open source routing software that Mowali runs, is able to route questions between various parties. And so the protocol is a 3-step protocol. There's discovery, agreement, and transfer. The money moves at transfer, but at the discovery stage, we ask the question, the first DFSP asks the question, who speaks for this phone number?
Yeah.
We find out from the lookup service who speaks, and then the request is routed across to the credit institution, and they will reply back with, yes, we can receive money for this phone number. We do speak for them, and their name is Joe Smith. And that data will go back to the originating DFSP. It's not stored at the center, but the information is sent back to help the originating DFSP present to the customer the information about where they're about to send money. Now, it's been very clear in the UK sense that recently Payee UK won an award at
Yes.
the payment awards
Yeah.
because of confirmation of Payee. The amount of fraud that can be taken out of the ecosystem by letting the customer see that they're definitely sending money to the right place, never mind mistakes, also fraud and mistakes.
Yeah.
But you've got to do this with sensitive design because there's the possibility of name harvesting, all that kind of stuff. So a scheme has to come together and decide to do this in a safe and secure way. And switching services at the center can be a big part of making that happen in a safe and secure way by putting the right controls in place.
Yeah.
So it's an exciting part of the protocol. It does require schemes to work together to make changes in their systems to make this work in a decentralized way. But decentralized is quite important to us because we're cybersecurity by design, and we don't want to create pots of information for the wrong people to get into their hands of the wrong people.
No, fantastic. Thank you. That was a good analogy against the UK. I saw the team pick up that award. It was really interesting. Awa, from your point of view, that was the next 12 months and double. So if we were sitting here in 5 years, what are your aspirations? Where would you hope to be?
So in the next 5 years, I would say in 2 words, it will be a matter of scalability and also channel diversification. As I said earlier, our immediate goal and objective is to make sure that we increase our coverage within the MNO network. But what about banks? What about the merchant payments? What about the fintechs? What do the customer want in the next 5 months, years? And 2 years ago, we didn't know anything about COVID-19, and it accelerated dramatically the digital world. So we also have to be open to any change and make sure we always listen and pay attention to the customer demand and how the market evolves. But in a nutshell, scalability and channel diversification.
Super, thanks, Awa. Lesley-Ann, just one for you from me. We talked a lot about the protocol, so thank you for making that simple to kind of for the audience today. So it can be quite technical, but that was a great explanation. So thank you for that. On the other side of the coin, what's the real benefits of interoperability? What do you see? How's it changing the payments landscape in Africa specifically?
I think anyone who works in the Africa landscape knows that it's hard to accept payments. And at the end of the day, as you build new services, money makes the world go round. And so how do we get rid of fragmentation, and how do we make it ubiquitous that wherever you store your money, you can send and spend your money? That is at the center of how do we move away from cash towards digital services. When we do, we create new data, we create alternative data sources that will lead to the kind of products and services like the buy now, pay later, like all of the productive loans that MFIs and banks can offer to customers. We need the data, and if the world remains in cash, there's an implicit cost to cash, plus we're not seeing a digital footprint, and that leaves people behind.
No, that's super. Thank you. So I'm conscious of timing. I think 14 minutes time, our audience will be tuning in again for the next session. So appreciate you both sharing your thoughts. Lesley-Ann, thank you very much. Very insightful. Likely, it's really interesting to hear from you both. Thanks very much for your time. And similarly, I'd also like to thank Amnah for her presentation. On behalf of the GSMA, big thank you to all of you. And for our audience, we look forward to seeing you in 14 minutes time when you've had a chance to grab your cup of coffee. We'll speak to you then. Thanks all for our guests this morning. Thank you.